It's Tuesday, March 6th at 10 p.m. Eastern Standard Time. Just want to go over a couple of trades with you here. This is a Hilton Head Island Forex cash system. This is a very simple system to use. All you do is you have MACD down here. You have and four moving averages. You have the yellow is a 5 EMA. The magenta is a 13 exponential moving average. 0.55 simple and 200 EMA. As you can see, we've got the signal line came here right at about that point. That's where we had the MACD confirming the move. Let's move it up one candle, so we're right in the middle of that candle. So anyway, so at that point, you would go along. You have both of the EMAs crossing through. Actually, whenever you see the 55 and the 200 squeeze together, you usually do get a pretty decent move out of it, one way or the other. We always try to stay on the other side of the 200 EMA. So this would be a long entry. You have the MACD waving up through the zero line, so that would be a long entry at that point, and we carry it up onto the top. Even if you're a little bit late getting out, that's still about a 220, 230 point move. You can get out of it at that point. You could also get out of it when you see at this point here when MACD crosses over, but you can scale out of your position as well as scaling in, but this still may have a little bit of room to go. You can see the MACD is starting to wave down. Price or the two EMAs are coming up to meet price. Who knows where we're going to go from here, but that was a nice 220, 230 point move on the pound just the past couple of days. Let's move over to the yen. Again, we have the 55 and 200 relatively close. We have the 5 and 13 passing through the 55, as well as the MACD going below the zero line. This move here on the yen right now, even if you're bonehead and didn't really get out right away, you could get out while MACD is crossing back north again. You could also scale out of your position, always leaving a little bit on to run, catch a run of the move, because you never know how long currencies are going to trend. But even at that point, the last couple of days, that's another 100 pips on the yen. Let's move over here to the US dollar Swiss franc, the Swissy. Again, at this green line, that's when we had the MACD penetrating through the zero line. The 513 are crossing below the 55, and the 55 is below the 200, which we would be looking for a short entry here. We got it, and say we didn't catch that right away. We got in at that candle. That is another 100 point move. Even if you got in late and and you exited late as well, or take a little bit off the table, leave some on to run. But we do have the the MACD signal lines are crossing again, as you can see right around this point. Now let's move over here. We did have the blue MACD trigger line coming up and going above the zero line. You could have either gotten out at that point, or what you'll find with this system is the 55 simple moving average kind of repels price. So actually you could have either gotten out at that point or re-entered when you see MACD then moving down. The two moving averages are away. We didn't get the full cross. So this could have been another entry point, but to keep things real conservative here on the Swissy, that would be another from this point here, even in exiting out right now, that's another 100 point run. Let's go over and take a look at the euro. Now the euro has been on a tear here recently, and some people really don't think that there's any, end in sight. I think the next major point of resistance could be a good round number. Even possibly, here it came up and tested 154, almost made it. 155 we might get a little bit of resistance for, but you trade what you see, not what you think. So what we've seen here at this, let's grab the crosshair. At that point, we've had the MACD trigger line going through the 0. The 55 is above the 200, so we are maintaining a long bias on this. Price goes through. We have the two faster moving averages going through the 55. You can enter at that point, and even if you got a little scared, who knows why, even if you exited basically at this point right now, that's about 165, 170 point run on the euro so far. We do have MACD waving back down, but you can see MACD at this point in here was starting to wave down and price was moving sideways. MACD will always kind of find its way. If price is going sideways and we're in a consolidation period, MACD will head for the 0 line and wait for its next move. It's not a forecast of price, but it just basically paints a picture of what has happened. Now this is a very simple system to follow, and if you just traded these 4 currency pairs in the last couple of days, just these exclusively, doing a little bit of swing trading, that's 590 to 600 points just on these 4 currency pairs alone. You can apply this system to most any time frame. Another system I've been looking at is they've called for a short on the US CAD. Now this is a daily play. The caveat to this particular system is if you do enter at this point short, try to get in around 98.48. This requires a little bit larger stop loss of about 100 pips. This is a multiple lot or a multiple position trading system. The idea is once the trade moves 50 points within your favor, you go ahead and take a portion of your trade off the table and you move your stop loss to break even. So we're banking 50 pips, and then we're moving our stop loss to break even to see if we can catch the beginning of a move. We'll have more on this trading system later, but right now, Tuesday evening, March 6th, we've had a signal to take the US Canadian dollar short. Again, about 100 pip stop loss, so use your money management rules to don't risk ever more than 3 to 5% of your account on any one particular trade, so adjust your stop loss accordingly. And if you just can't afford this trade or afford a 100-point stop loss, and this particular system is not for you. But we'll watch this for the next couple of days and give you update in a couple of days. That's all for now, but be careful out there.